Okay, I'm going to give you my take on the market. I think we are probably now, after almost 10 years, the most crucial point ever in having one of the biggest crashes ever. Now, if you recall, we had, when Trump was elected back in November 2016, we had this beautiful rally all based on what he was going to do. Everything was he was going to do. He was going to, of course, build roads and bridges. He was going to cut all regulations. He was going to do the biggest tax cut in history. He was going to do everything. Okay, and that's why we had this huge rally. You'll never see that again. That was an opportunity. If you missed that, you missed a golden opportunity, because it's called buy on a rumor. Okay, and then it stopped. We had just a tiny pullback, and that's when I said, you know what? I'm predicting a stock market crash. I said that on January 16, 2018, as we're going to crash. And I said, I think December will be the worst month for the crash. And I said that on January 18th, almost 11 months out. And I was correct. And we had our crash. Now, the reason we had our crash is because Powell was trying to curb the inflation, which you try to do. That's the job of the Federal Reserve, because you should always be raising rates, okay, above what inflation is, so that it doesn't eat into our savings and our dollars. And nobody's been doing that. In the last 10 years, nobody's been raising rates to fight inflation. So they lie about inflation and tell us inflation. There's no inflation. The Fed has a target of 2%. It's nowhere near that. All a bunch of lies. So now that we have big inflation, especially with tariffs, that means 2,500 products that everybody uses going up 25% in costs. We've had a big move in cost in student loans, auto loans, credit cards. Between the two, there is an increase of $60 billion a month in cost. It's going to have to be eaten by consumers. That's going to be pretty tough when they only got an $80 a month raise. So that's not going to work too well. Here's your biggest telltale signal right here. You got the triple top is one of the biggest indicator that you're going to get a correction. Very seldom you escape it. So if Trump can't convince Powell to do another QE, to bring interest rates back to near zero, because Trump, that's what he's trying to replace. He's trying to do this here again. See this back here? He wants to repeat this. Okay, well, good luck. Okay, times have changed since back here. All right, so, but that's what he's trying to get Powell to do. If he can't, then the game is over, because China's hurting. The global markets are all falling apart. You see our own markets. The Europeans are pulling money out of our market left and right. You could see in our own, just in the last, it's 8 months, and we don't have enough money coming in to break out. In 8 months, we haven't gained more than 15 points, 40 points. In 8 months, we dropped. We're just back to where we were. And then when you go back and you look at something like this is what we should be doing. We should have broken out right here and kept going, okay, or break out here and keep going. Trump's going to try to break us out and keep going using another quantitative easing and zero rates again, but I don't think it's going to work, even if he gets it. The biggest indicator we're also having is the volume. If you notice these red bars, on Monday when we had that 700-point drop, and then the buyers came back, and the buy and the pullback, well, it's not working anymore. We had more sellers than buyers on the pullback. If you look at the green bars here, look how the volume is falling off. If you look at the two big selling days, the volume is falling off. The buy and the pullback, it looks like it's pretty much over. So, again, my gang, my members, we're set to go. If Trump can convince Powell to do a QE, we'll be there. We'll take advantage of it like we took advantage of it here. And but if Powell holds tight and says, no, I'm not going to raise rates, but I'm certainly not going to turn around and drop rates, then it's over. This market will collapse, we'll go right down to these lows or even further. I think we'll probably come all the way back to where we were here in November 2016, given this whole gain up. I think the market could drop about 50, 60 points. So that's it. All right. That's the honest truth. But remember, markets always do what they're supposed to do, but never when they're supposed to do it. And remember, when the market opens, remember, you lose your opinions, you don't lose your money. Why don't you join? Be a member, okay? And let me be your coach through this. Your 401k certainly aren't going to work. And let me tell you, if you're in a 401k, you better start learning how to hedge it right now, because the last thing they do, they will never take care of you. In a 401k, when the market starts to crash, you'll be calling them, what should I do? They'll keep telling you cost average down. Man, you should be hedging your 401k. Mark this down. The Phil Grandy said, okay, on May 17, 2019, you better be preparing for a stock market crash if you're in a 401k, because you're not allowed to make money when the market goes down. You're not allowed to sell short, which is ridiculous. I will see you on the charts. Join my gang.